Good morning. I'm David Talbot, Managing Director and Head of Research at Red Cloud Securities. Our next presentation is from Aura Minerals, a gold and copper producer focused on mine development and operations in the Americas, and they just reported record corporate production and revenue. I invite Rodrigo Barbosa, President, CEO, and Director, and Gabriel Catalani, IR, to speak to you today. Rodrigo, you have 15 minutes, and then we'll have a 5-minute Q&A session at the end. Attendees, please feel free to ask questions using the Q&A link below. So take it away, Rodrigo.
Good morning, David. Thank you for inviting us, and good morning, everyone that is here with us. What I'm presenting here for you today, it's a story of not a new company. This company has been listed in TSX since 2008. However, it has not been able to move forward the project, has had problems to find the capital in order to fund. It has underinvested in their own producing assets, and I could not move forward in the stock exchange during 2011, 12, 13, 14. However, since 14, a new shareholder start buying shares, assume control close to 16, reformed the board, and invited me to assume as a CEO of the company since early 17 to do a transformation in a company that had a very interesting potential. And what we see today is not only more a potential, but we are now consistently delivering growth results, and I expect to double our size in the next 4 years. So I'll ask Gabriel if you want to put the first slide. How we know Aura, we are gold and copper, close to 80% gold, 20% copper, multi-jurisdictions assets, gold assets in Brazil, gold assets in Honduras, copper and gold in Mexico, gold asset also in producing in the US, and also a greenfield projects to develop in Brazil and in Colombia. So multi-jurisdictions, multi-assets that we have been consistently growing, but we still have much more to do. Very much under the radar in North America, in investors. We've been totally focused on turning around the company, and only since early this year, we start having a proactive approach with the equity capital markets in the US and Canada. Company fully funded, negative net debt to double the size and pay dividends. We also are moving to the first or second quartile in terms of cash costs. Our cash cost now it's close to $750 per ounce, 750, 800, but still moving down as we progress in our brownfield expansions and start also to develop the greenfield projects. We have recently, as we have a strong cash position and strong growth that will generate more cash, very aggressive dividend policy, 20% of EBITDA minus capex, that we will systematically pay over the years, while we will also be able to grow. Gabriel, if you want to skip that. So as I was mentioning, this is since we started the process, Aura was producing close to 120,000 ounces per year. Since then, we've been able to develop those assets, expand as a brownfield expansions in Brazil, also in Honduras. We could restart Aranzazu, and also increasing our revenues, our production from 120,000 ounces to 204,000 ounces last year. But last year we were also impacted by COVID, that we had to slow down operations in Brazil and Mexico and shut down Honduras. Only on the last quarter, we produced close to 70,000 ounces. On Q3 last year, we produced close to 60,000 ounces. We are already on the running rate of 60 to 70,000 ounces per quarter. But we just declared commercial production in operations in the US on December. We are expanding Aranzazu by 30%. We are starting the developing and construction of Almas project that we just released a feasibility study last month, which is giving close to 50% of internal rate of return unleveraged, leveraged close to 100% of our internal rate of return in that project that we will invest $72 million during 17 years of a life of mine. Matupá is another greenfield project that we should complete the feasibility study by the end of the year to start construction next year and operation in 2023. So when we combine brownfield expansions with the greenfield projects that we already have in our portfolio, we will be producing close to 480,000 ounces by 2024. Only now on 21, we just issued a guidance that we will come from 200,000 ounces production per year from 250 and 290 next year with Almas and EPP high grade coming into production. Will be close to 300,000 ounces. And then by 2024, close to over 400,000 ounces, while we'll be also being able to pay dividends as we do have a very strong cash position. We just released our results for 2020. Our cash position is $118 million, negative net debt close to $50 million. Next slide. This is a little bit what we've done in the last 4 years. This is an interesting transformation process that Aura has gone through the last years. As I mentioned, I was totally focused on doing homework and then rearranging the assets, rearranging the balance sheet and also the team, because any company needs to grow, needs to work diligently in each of these 3 pillars that we say: high quality assets and growth that we do have, brownfield and greenfield projects. We sold one project, we merged another company. We also restarted Aranzazu that we are now producing with half of the cash cost that they were operating in the past. And I will talk a little bit more in the next slide about this. We also worked very strongly to strengthen our balance sheet, because any company to grow needs to have a strong balance sheet. We have a strong cash position, negative net debt, and also we're already generating strong cash flows from our operations. And third, we also worked on business and team culture, decentralize a little bit more the decisions from corporate and technically, and then giving more accountability and more autonomy for the local managers to make technical improvements, as long as we work very strong on values under which they will make those decisions, and we provide them very good visibility about what the impact of their decision over cash flows, community, and social, and also in the environment. So all in all, we have been restructuring the assets, restructuring balance sheet, and working a lot on the team and culture of Aura, so that we now feel prepared to continue to grow, to double our size, while we'll be able also to pay the dividends. Next one. Just a slide, an example what we've been doing in our assets that have been underinvested and undermanaged in the past. Aranzazu, when we joined the company, it was under care and maintenance. We could reassess Aranzazu. Copper price was also going up again back in 2017. We saw an opportunity to significantly reduce the cost of operation with a better plan and with a better management system. We restarted that mine in 2019. We wrapped it up by the end of the year. 2020, we started investing more, producing cash flows, investing more also in geology to expand the life of mine. And we've been able to achieve half of the cash costs that this mine were performing by 2012, 13, and then 14. And there's still much more room to grow. Aranzazu, we've done some geological study that show us a very interesting potential, not only to extend the life of mine, but also to be able to increase production from the mine and from the plant. So we are already increasing 30% of capacity of Aranzazu. More than 20% has been completed. We should be reaching the 30% by mid this year with 100,000 tons per month. While we will also continue to reduce our costs in terms of increasing recoveries, reducing dilutions, and production. Next slide, Gabriel. So results that we've been able to harvest are significant and comes from a combination of strong and a higher production. We come from 122,000 ounces per year. Last quarter was 70,000 ounces. So if you just analyze the second semester of last year, which was not impacted significantly by COVID, we are already at a running rate of 250,000 ounces of production per year. And then we just declared commercial production of a Gold Road December last year. And now we're still ramping up the increased capacity for Aranzazu that will also bring us a higher production. So we come from 120,000 ounces to 204 last year, annualized of second semester to 50, and we'll be between 260 to 90 during this year. When you combine the higher gold prices also helped. So we came from 113, 1,300, 1,400 to 18, close to 1,800. So revenues come from $158 million, $300 million last year. Second semester annualized $380 million. Higher production, better gold price. And we also had a one-time an interesting gain of efficiency and cost reductions. We sold one project that Aura was not being able to move forward, Serrote, very good project, but was too big for us. We restarted one mine, was under care and maintenance, and we also made improvements such as reducing dilution, increasing recoveries, and also entering the higher grade areas that we could develop in Brazil. Margin has significantly increased from 14, 26, 40% in only second semester last year, 50%. And all the projects that we have to grow will also provide us an ability to continue to reduce the cost. We are already producing at $750 to $780 of cost per ounce. When we see our portfolio of growth, we will be able to harvest further cost reduction, either by higher grades that's coming into production in EPP, economy of scale in Aranzazu as we grow, and lower cash cost projects such as Almas and Matupá that we are starting to develop. One, we start construction in a couple of months. The other, we should start construction by early next year. Next one, Gabriel. So this is a more detailed roadmap of the portfolio we have, and very well defined how we will be able to achieve the growth. Again, Gold Road, we declared commercial production December last year. We were full this year, and we plan also to double production of Gold Road. Gold Road is a small mine underground. We acquired last year, 30,000 ounces per year, but we plan to be close to 60, 70 by 2024. There's a lot of geological potential for us to do so, and we just started to invest in geology to understand how we could move forward and increase production. Aranzazu, 30% I mentioned with you. We don't also expect to have a significant impact by COVID in the operations in San Andrés, Honduras, in EPP, which will give us a 25 to 40% increase in production this year. And 23, we have Ernesto high grade. This is a mine that we developed. It's been 2 years that we've been developing Ernesto. It's on the complex operation of EPP. It's a high grade open pit, 2.53 grams per ton. That combined with our operations in EPP, we bring our production from 65,000 ounces to 100,000 ounces next year without adding cost, because it's just a higher grade. Then we have Almas project, this project that will start construction in a couple of months, start producing by mid next year, a project that has 17 years life of mine, $72 million of CapEx, internal rate of return close to 50% per year during the 17 years of life of mine, and leveraged the internal rate of return, because we try to leverage our project by 50%, will be 100% per year during the 17 years life of mine, and payback for the equity side less than 1 year. Matupá should be very similar. We don't have yet the reserves. We do have the resources and the density enough to be the reserves. However, we need now to do metallurgical, mine design, and plant design. There's no evidence that there will be significant flaws, but we need to conduct all the desktop analysis during these years in order to issue a feasibility study by the end of the year and be able to start construction by early this year. And all those projects are already fully permitted. When you add ore, okay, Gabriel, you can, next one. One thing that if you compare ore, that's with our peers, very few companies can double the size in such a short term. What you will see also is that we have a lower life of mine compared to the peers. And that's not because we don't have potential, we don't have the resources. It's just because this company has underinvested and undermanaged the asset. And since 2-3 years ago that we started investing more in geology to understand the potential. And we have been able also to increase resources and reserves as we are also producing, and new information will be on the AIF, although we expect to be a much more significant update on resources and reserves during this year, when we just upgraded also our investment in geology. This is just a few examples. We're producing over 4 to 10% of the areas that we already have the rights to develop. Gabriel? Compared to the peers, and before I wrap this up, you'll see, and this is the picture, but then I'll also put important also to understand the movie, where we're coming from and where we're going. We are on terms of price per NAV, 20% discount compared to the peers, although we still have a significant opportunities to increase our NAV based on new resources and reserves. We are 32% discounted compared to the group in price over cash flows, although we are still growing up, doubling the size, and of course, that will have a significant impact also over our cash flows. And in terms of enterprise value over resources, 10%, close to 10% discount compared to the peers. Although, as I mentioned to you, we will still have significant opportunities to increase our resources due to this higher geological investment that we are doing this year. We were basically doing $5–10 million of geological investment per year. This year increased to close to $25–29 million, where we already have the targets detected, the geophysics done, and now the surface examples done. All in all, Aura is now well positioned to double the size. We have negative net debt, fully funded for the project. Actually, we should have, if prices continue to be at this stage, excess of cash, and that's why we approved the dividend yield, a dividend payout to provide not only growth to our shareholders, but also in the meanwhile, a nice interesting yield for them also to harvest results while we can grow. And all the growth opportunity, I didn't have time, but I would invite you all to take a look. We will do all this growth while we will also be able to reduce our costs. Higher grade in EPP, bigger scale in Aranzazu, lower cash cost from scratch, and projects that we start developing greenfield, Almas, and potentially also Matupá. Thank you very much, and I will open for questions.
Okay, thank you very much, Rodrigo. Can you provide a little bit of color on cost expectations? You're already the bottom quartile here. During production ramp up over the next few years, you mentioned higher grades, economies of scale. Do you have any other programs underway that can help with the costs?
Yeah, we are constantly looking alternatives to reduce our costs and gain efficiency. There's still room to improve recoveries in Brazil. There's still room to reduce dilution on Aranzazu. So there's all the productivity gains that we can monitor on the monthly basis still ongoing. There's still a lot of opportunities to gain efficiency. Honduras also, it's an asset, open pit, low grade, very low strip ratio, good cash flows. But while we were merging, selling, restarting, and buying another business, we could not deep dive on that. So we still want to know what we can gain in terms of productivity in Honduras. We're just starting right now to dive in the assets to see what we could increase efficiency there. And it's the way we manage. We decentralize a lot the decision, technical decision. We give more autonomy. We align the interests, meritocracy at the site. We give them more visibility of impact of cash flows and so on. And it's incredible, the ideas and the impact they can do on the operations when you give them more autonomy.
Okay, thank you. The gold price here has dipped a little bit in the last couple of months. Do you see any risk of reducing the dividend, or will your low costs on production growth take care of that?
No, our dividend will be based on EBITDA, 20% of EBITDA minus recurring capex. So somehow will be impacted if gold price continue to decrease. However, if you see the evaluation today, and then you put the gold price, analyst says that we are actually priced at the 14 or 1300 gold price to be at the right value as it is today. So that's still, even if the gold price decreases, our growth in production and cost reduction will offset a lot of the loss of margin. So the shareholders will be somehow protected to the downside of the gold, if there's any. We still believe that's still a lot of room to increase gold prices down the road. There's a lot of uncertainties already on the economy.
Okay, thank you very much. And I guess I'm going to combine the next couple of questions. Are you planning on doing any other M&A activities? And do you have the opportunity to expand your copper production rates given the rise in copper prices?
Yes, we are actively looking at M&A alternatives. We are America's players, preferably in countries that we already operate. We like US, we like Canada, we like Brazil, we like Mexico. So we'll be looking alternatives on those countries. We haven't seen yet a very interesting. We've analyzed more than 20, but we are used now to 40, 50, 60% internal rate of return in dollars unleveraged. So as long as we see a very interesting opportunity to move on M&As, we'll do, but we'll do it very diligently. Second question that you made, sorry, David.
Is there an opportunity to expand your copper production?
Yes.
Or look for more copper products?
Yes, we are actually expanding 30% production of copper this year. We were already 20% done. The remaining 10% will be done until the mid of the year. We were producing 70,000, 80,000 tons per month. Now we are close to 100,000 tons. but we plan to double our size of Aranhas Azul in the next 3 years until 2024. And we see that's why we intensified more the geological studies in Aranhas Azul in order to get the reserves and then be able to put that on that plant.
Perfect. Okay, guys, thank you very much for sharing Aura Minerals. Up next, we've got Blue Thunder Mining. Take care, everyone.